Oh, why do they say buy the dip, sell the rip? It's selling the dip. I mean, it's buying the dip, selling the rip profitable. And as an investor, how do you know that the stock market is low risk if you buy the dip and sell the rip? That's what we're gonna go over. As you can tell, the stock market, the Dow Jones is the oldest index. The Dow Jones index came out in the late 1800s. And what we're gonna see on this charts is we're gonna see how the Dow Jones performed since the 1915s. So whatever asset class you like, look up a chart. You know what I'm saying, for the asset growth you're looking at. You know what I'm saying? Because the one thing with these assets is, man, they make you money while you sleep. That's the best part about it. The other thing is you ain't got no choice but to make money. So investing in assets is how you make your money work for you. So you ain't gotta always work for your money. And that's essentially how you retire, because you have done accumulated so much money throughout the years. It's working for you. So you ain't gotta work for the money itself, you feel me? So what we're gonna do is, look, the Dow Jones, it started out, well, 1914, it started out at $1,700. And look, it's at $43,000 now in 2025. As you can tell, it's always gonna be pullbacks with this asset class, and that's every asset class: gold, houses, I mean any asset class, you know. So here's one strategy: always invest on a pullback. What kind of pullback? You can go for a 5% pullback, 10% pullback, 20% pullback. I know me personally on my Roth IRA, if it's some shit that fall 4% in a day, I'm gonna buy it. Cause honestly, it's a good company. That's all I invest in, is good companies. I should show y'all a breakdown of all the stocks that's in the Dow Jones index. That's what I'm gonna do for you right now, so y'all get a taste of what you're really investing in. And also, I had wanted to show y'all, once I looked at this picture right here, I had wanted to show y'all which sectors to invest in. We might do that next. But as you can tell, the technology sector is the best. It did the highest return out of all of them, and it does the best annual return out of all of them, and it doesn't do the worst. And I will say technology is the best sector, just because there's no cap. There's no cap. There's no cap to how great technology can be. In 20, 30 years, I don't even understand. Like, I be asking my lady all the time, like, AI just started right now. In 20, 30, 40 years, like when we 60, when we double our age, how advanced is AI gonna be? How advanced is phones gonna be? You feel me? So the technology sector has the most potential growth. It's the most innovative. This is how the GDP grows, you know, better technology, higher GDP. You know what I'm saying? The better technology, the more money we can make. Yeah, the healthier we are, the more we can make. But listen, the better the technology, the more money we can make. The better the phones, the better the cameras, the better the computers, all this shit. The better data centers, the better AI, all the better machines, all this. So technology is for sure a good sector. And you just analyze this yourself. I'm gonna give y'all a quick rundown of like some of the big companies in the S&P 500: Microsoft, Nvidia, Apple, Amazon, Meta, Broadcom, Tesla, Google, Berkshire Hathaway, Google, JPM, Lilly, Visa, Netflix, ExxonMobil, Costco, MasterCard. Look at all these top 500 companies. If you want to invest in good companies that will do this long term, you want to see growth long term, definitely invest in the top 500 companies in the world, and the top 30 companies in the world. Let's see how we're gonna see this. Let's see. I know it's gonna be Apple. Oh, there we go. Look, I was just gonna say, okay, so these are the top 30 companies in the world that's publicly traded. Nvidia is my number one. I'm holding Nvidia till I die. I'm gonna pass Nvidia off to all the grandkids. Microsoft, all these, the top 300, the top 30. These are the top 30 companies. These are some companies you may want to invest in, or just invest in the index. But what I would do, I would always invest on the pullback, because the market is going to always pull back. You know, what is a good pullback to invest in? I just told y'all, I personally do 4% on the daily. Like if it dropped 4% on the daily, it just got some bad turbulent news, it's still a good company, it's gonna recover eventually. If it fall 4% for 10 days in a row, that's 40%. If some fall 40% that's in the S&P 500 or the Dow Jones, it's a 99% chance it's gonna recover, unless the company just go to shit, you feel me? Unless the company is terrible, they get a new CEO, their finances are terrible. What you want to find is the most innovative company on this list, and then you want to make sure it's undervalued. That's how I go with this investing shit. And I can tell y'all right now what's undervalued. I know UPS is near an undervalued level. Let's check out UPS. Let's clear all this drawing off, and let me make sure I went over everything I was supposed to. I also love to start the video off with this board right here, just informing y'all for this. I got a lot ahead of me today. I wanted to knock this video out though for sure. Let's just exit that out. But back to the board while I get back right. I don't think I need to say nothing up there. This is gonna be the next video. But let's go over some big good companies that's undervalued right now. I done deleted my indicators. I ain't want to do all that, man. There we go. I just want to delete these drawings. All right, my favorite way or my best technical way to find an undervalued stock is making sure that bid is under 30 RSI on the weekly. I like to use the weekly just because the higher time frame you use, the less it'll fake you out and the less noise, you know what I'm saying? But also, you got to pair RSI with support and pair it with some good news on an innovative company. Like UPS right here. UPS is approaching this macro support level, macro demand. Let's put it in the zone. We can see a little zone area. Once it comes to these two lines, it always react at these two lines. And it reacts bullishly to these lines. This line right here at the bottom. Broke above, boom, boom, held. Broke above, you know, boom, held. It's approaching again. Not only is it approaching again, but the RSI is 37. It's low as hell. Yeah, okay, so let's measure the pullback on this UPS, right? Let's see. I gotta read the news. I forgot what happened to them, what made them fall to hell. But look, 57%. Oh, I know one thing that made them fall to hell is that beef with Amazon. Amazon and UPS fell out. That was a while back though. It's probably something more recent. 38% pullback. Let's do this real quick. What this shit was? I know this was a 38% pullback. Y'all gonna see the trend. I'm about to show y'all something real quick. This all you gotta do for good companies. Invest on a major pullback. This is 57% pullback. I ain't gonna lie, you gonna get your return with UPS. Technically, I think they're gonna bounce here, but also fundamentally, I think they will. Let's check it out. Honestly, they below $100 right now. That's a good sign. I love to see annual revenue growth, but at the same time, it's a big company. For their revenue to grow, you know, they're gonna have to be very innovative. That's why I'm saying technology is better, because with technology, you can create some shit that the world gonna love, and you can innovate and you can make unlimited amount of cash. But UPS can't really make unlimited amount of cash, but it's also safer than, or could be potentially safer than some technology stocks. So it's like you gotta be diversified, and yeah, you gotta be diversified. There's no way around it. Let's see, UPS started back in the early 2000s, you feel me? Let's see, the biggest pullback was 57% on UPS. The last time it pulled back, 38%. Let's see, it ran all the way from here. It ran up 180%. So, yeah, buy on a pullback. buy on a pullback. For sure. I need to see it did FedEx beat earnings because I know they had earnings yesterday. We got to go over an earnings call. We got to break down an earnings call. And we got to do all that as well. I got to show y'all some financial ratios and check them out. Man, it's a lot I want to do for this channel, but first thing first, I just want to make y'all financially optimistic and give y'all some tips and shit to help y'all lock in, because even I need to lock in, even I need guidance. And everybody in the world can benefit somebody with their knowledge, so I'm just here to share mine as much as possible. Okay, they beat earnings, which is great. Is they earnings? Oh shit, well, they beat earnings like a motherfucker, didn't they? Got dividends paying today. How much dividends? $1.45 per share. That's another thing we gotta go over. I ain't gonna lie, I ain't no big dividend investor yet, cause I got a lot of high growth in my account. Like I got Hood. Hood finna do 100%, bro. Hood is, oh my God, it's at all-time high. I can't believe it. What is it gonna do today? But Hood, I think I'm like 90% in the Roth IRA. Once that bitch hit 100%, I'ma say I have, and I'ma redistribute it in the losers. I'm at 86% right now. My average is around $45. I wish I got in around this level, I ain't gonna lie. I think I got in here, but I just average up. Like I tell y'all, every day a stock fall like 3-4%, I'm investing in it because, I mean, it's a good company. It's going to recover that 4% L. And when it do recover that 4% L, it'll double that. It may triple that, you feel me? So buying on the 4% dip gives you a potential 8% return, you know, because it's a good company. But it's also another thing is always keep your chips steadily available, because you can add that 4%, but then it might fall 16%. Then what are you gonna do? If it falls 16% and it's still a good company, it's just on sale. You always buy shit on sale. When clothes on sale, you buy it low. You don't sell clothes high, you just buy low and keep. But with stocks, you wanna buy low and sell. With cars, when I was flipping cars, buy cars low, sell them. You know what I'm saying? The same concept. When you buying phones, you reselling, anything you resell, just like shares. You're investing in a company, you're buying their shares. You reselling the shares after they get off sale. Rinse and repeat. For your long-term Roth IRA, you're investing in a company long-term to grow with them. As the company grow, your bank account gonna grow. How do you know a company is gonna grow? Because you can read the financial statements, you can read the technical charts, and you can really bet on the CEO that, hey, this is the best CEO for this company. He actually made the company, and he's the CEO, and he got unlimited faith in his company. He got the best team in the world. He in control of all the finances, consistently innovating. They are undervalued. They got good financial ratios. Boom. Throw your money, throw a little money in there. Throw $5 in there. If you lose, you won't lose $5 if you check out all them things on your fingers. If the company is solid, you won't lose them $5. But at the same time, you will gain a lot more. Appreciate y'all for watching. I'm finna get off of this. I would show y'all a lot of things that I'm watching that's undervalued. I'm gonna just click through them real